What's up, guys? Welcome to Spark and Trades recap. I'm doing this live as I'm kind of also recording live in the market. Just to give you guys an idea of how this day has been going for me. I only took one trade today. It was a meta trade. Kind of saw some really dope opportunities on NQ. But my options, I usually, either take a spot. I should just stick to SPY and QQQ because then I would have been a part of that move and could have potentially taken it in my futures account. But it's all good. We ended the day off with a solid green trade to the upside and kind of traded the charts to the best of our ability. So let's get into it. As we were watching QQQ, I won't bring that chart up because it's going to take time to load. As we were watching QQQ, the market was kind of just like ping-ponging and ranging in a range. You know what? Let's just do it so you guys can actually see, right? You're not here. You don't know what's going on. So QQQ in the morning was in this range, right? Just kind of 9:30 is right here. This is your trigger candle right here. Massive dump straight out the gate. Nice move. 424 brought us down to 382-ish. That's a nice 50-point move, right? Then it just started hovering, giving us a nice 30, 40-point move here, 43-point move here. But this thing is, these are 5-minute candles, so, it's driving you crazy thinking like, well, why is the market ping-ponging like this? Is it going to keep going down? I would not go against a bearish market like this. Red on this side. The only thing that's green is your 1 hour. And it was squeezing when it came down. So, that to me tells me that they could flip the 1 hour. It just, it doesn't have to happen. So as this ping pong is going on, I told the group, I'm looking for this initial short. This ricocheted into my kill box and then immediately came back down. Like, just didn't even give me a chance to assess getting in. But this is why you have to have like your orders kind of resting there sometimes. Now that move happened twice. So this is their start of the 15-minute candle right here. The middle chart. I'm on the far right chart though, the 5-minute. It comes back up, wicks into my kill box again, and then slams back down for a possible really good 3x trade. This is all I'm willing to risk if they did go in there. So if you move that box, let's see how many times you get it. 1, maybe 2, 2.5, right? 2.5 kind of risk reward kind of trade right there. I'm only willing to lose 20. We ended up going like maybe 60 points from that area. Let's see. 20. We ended up doing 50 points. So not a bad trade there. But that's what was going on in my head at the time that I took the meta trade. However, meta, and then just so you guys also know, I'm seeing a demand line forming on the 15-minute as all of this price action is happening. So still told the group, if you do get to that level, take profit because the bulls can step in down there with a vengeance. And look at where we get a nice V-shaped move to the upside. We took this trade yesterday. If you recall, I only have like 2 trades in my arsenal. 3 really, but this is a part of the playbook for a reversal trade when a 15-minute demand or supply line comes up. You'll see this happen again today. But let's get into meta, the actual trade. So meta, I have this and I never used to do this because I just think like watching too many stocks keeps you out of focusing on one thing and kind of developing the plan to take or execute that strategy. So maybe that's what I'm going through where I'm missing certain entries. Don't really know, but I see meta and meta is way up here while the market is doing all this consolidation. So I'm thinking, wow. What I did was a quick scan of this right here. And in the morning, I'm looking at all the stocks that are possibly, and I don't do this, possibly can do a run up. I liked Apple, but I didn't take Apple because it was like around this time. This was a little bit too wild. Tesla to the bottom left. Over here, I'm going to NVIDIA. In the morning, we were looking at this kind of condition. It was coming down with the rest of the market. Google was going crazy. You probably missed the move already. And this is why I don't look at multiple stocks because, I'm going to FOMO into something. And AMD was probably a bad call because of the probable condition. So red, green, red, 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 meaning the trend at the time. This was nice. Amazon was nice. and Meta was nice. And both were in, Amazon was actually better because Amazon made it to the money zone. So I should have picked up on that. Anywho, once I kind of see that on a snapshot, if your 5 minute is telling you we're bearish or bullish, see what the macro is telling you. Immediately I said, well, let me not FOMO into anything. Let me go to the macro. Once I saw this green on the 1 hour far left side, a green on the 15 minute, and green on the 5, we have a triple threat condition. I talked about this in previous trades, but I never had a chance to really show you what that trade looks like. So it's kind of awesome to be able to do that. Now, the execution of this trade wasn't the best to my ability. We're going to pull up the 5 minute options chart down here so you can see the actual execution of the trade. I know a lot of you guys don't see the actual, you can see where I got in and where I got out based on the way I kind of formulate this entry and stuff like that. But look, rule number 1 that's broken: never take a trade that's not at the money zone if you're going to take a triple threat trade. The opportunity should and will come to you. With options, you have to wait for that because the valuation of the contract and the premium that's going to happen is going to it should spook you out of the trade. It should. It's like that literally is a trick meant to get you out of the trade, only to bounce at the money zone. So what I did was, you know what, that was a stupid entry. Hindsight, stupid entry. I wasn't really hindsight. As soon as I took it, I was like, this is not my ideal entry. I'm looking for a breakout right out of here, but usually they'll go back to the money zone and then bounce. Look what they did. Went back to the money zone and then bounce. What that looks like on the 5 minute was this drop, stomached it. Contracts were still doing kind of good. Then that next drop came in and it was just, a slaughterhouse, a 159 entry. As you can see, that white line there, supported by my actual entry. We came down to 130 something, still didn't pull the trigger. This line should defend us. 123 gets smoked. They're down to 113, hit a low of 97 cents. I didn't even see that. I saw 110 as the lowest, and I must have tuned out or was looking at something else. Immediately, market reacts to the 200 moving average on the contract 2 minute chart and starts to shoot back up. When I saw that shooting back up and we hit 36, we just kind of hovered around it. Now this is the price action on the 5 minute chart. Now that you guys kind of see where this chart is at, we're pretty much here on a 15 minute. We need to break highs for this contract to do any kind of breaking out of my entry range. It starts to do that around this area here, breaking highs. And now all I need is a really good IV spike. We get that IV spike here. Contracts make it to 96, hover around the 96.80 area, comes back down and hits this trend line, which is about 167. I'm still green on the trade. It starts to go back up. We see a 205 on a pop, which is this now kind of condition pop, and then I exit on that candle. So you can see my line is on it on the far right. So just to give you some perspective, we don't really need all this room on the 1 hour, right? We see that what's going on there. I like to give you a bigger picture of what is going on in my head as the trade is happening. So now that we see that I went in at 157 or 159 and got out at 205, it was a nice little 40-something% trade, maybe 30-something%. Nothing crazy, just what was it? A total of just 40-something bucks on the day, $46 on the day. And that was the only contract that I took on or the only play that I took in my live account on options on TOS. Usually you don't see my futures trade because I trade futures on TraderVate, and I don't stream that. Now this contract is back to my entry level, and we're not even close to. Well, I guess we are, but it's holding value. Let's see what ends up happening. Okay, let's move on to what this trade was about and why that money zone is my 8-1 setup. And I took that trade with no fear. So the bulls are in control on the 1 hour, 15 minute, and the 5. We should get a pullback into the money zone. Price literally comes back on the far right into the money zone before that white candle comes in. After you see a white candle, expect green afterwards. Green, 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 green. I'm not leaving the trade. So, and cyan is your ideal entry to your ideal condition to get into a possible bounce out of that zone. So every time you see a cyan candle, a pullback is happening. If you see cyan in the green zone, enter, boom, you get this pop. White candle, you expect green, you don't see that, you see cyan. White candle, more cyan, more cyan, more cyan, there goes your green. So maybe getting out over there would have been better. I don't think so. All we did was get maybe another 30, 40, 30, maybe another 20 cents from my exit. Yeah, because the contract said higher, 30 something. And now we would have had to dealt with this. Maybe I get out at this red candle because the cyan condition pullback is no longer valid, right? And that means that on the contract, if you know anything about options, you lose premium really, really fast on expiration that's going to happen like, today. So instead of a 205 exit, I'd have been getting out at like maybe 180s, 190. So basically risking a whole 15 cents. So you want to sell into strength, and it's not an easy science, but you can definitely sometimes top tick the play. So if I sold at 205, on that candle, basically the price went up to 232. I left some on the table. Big deal. Look at this pullback you would have had to endure literally back to your 168, 159 entry. That's kind of hard to deal with, especially if you go back up, come back down, and these are some mountains, some roller coasters that you don't really want to kind of get involved in. Anywho, that was my meta trade today. Didn't get anything too crazy, but that's usually how my options trades go. I'm building this small account, brick by brick, and just taking those two setups. So this 1 hour line that came in supply could have gotten you into that trade. 15-minute or 1 hour supply line are pretty good trades to take to the downside, and then you would have had to take in one of these pullbacks, expecting red candles all the way down as much as you can get. Now that we are done with that meta trade, and you see how I take the money zone pullback conditions, it's not easy. Sometimes you get a 2x condition. This is a 3x bullish condition. Sometimes you get a 2x where two charts align, preferably the 1 hour and the 15, of course. And then you can get a nice, decent trade. Like, for example, if we come out of this trade with an aggressive bounce, this red bearish condition on the 5-minute is not going to look like much. All right. So that's your spark recap for the day. That's my trade that I took. But let's take a look at NQ so you guys can see the other trades that I missed, but called out, definitely called out, and way ahead of time, so that my users can either execute, possibly take them. So definitely, keep in touch. Watch the videos live, and I don't keep my P&L on the side as I take a trade and show you how I execute or anything like that. Maybe I'll do that one day. I don't know. Those guys seem to get a lot of traction, but I'm not in it for that. Anywho. We know why we took the shorts. We have a 2x bearish condition. So anything up here was a kill to the downside. Call that out, missed that one, missed the second wick, ended up getting a nice 50-point trade. Down here you have your 15-minute left middle chart reversal condition. Once they pop back up, this is your area right here to get in. How do you get into that? When you see this wick, get in there as long as it meets the requirements of a 20-point stop. For that swing low, all the conditions then become like true. Sometimes you can look left and find a possible swing low, so that area could have been already established. We're actually somewhere right here at 361, right? Yeah, so 361. You could have risked 361. This is yesterday's play, same exact reversal trade, but you could have risked 340. So it's definitely something to get into, and you would have bottom wick that, immediately been in profit, something like 3x or 2x. And this one actually at target. Now we put our targets at supply levels because we know the market goes from supply to demand, and it has its price action in between that you can take advantage of. So like, say right here is a possible money zone entry. Your 1 hour and your 5-minute conditions are true. Money zone entries, 1 hour and 5-minute and 15-minute triple threat has now activated. You hit supply and you better take some profit off the table, because if you get caught up in this, it could hurt. So why did I call this shorts on? If you were watching the live stream, this condition or this entry kill box was over here, but that's because we saw the 15-minute chart, the middle chart, produce a supply line here. And once we saw that, I actually essentially wanted a pullback. So we got the move down that essentially always happens, that triggers the V-shape play. So let's just say this was your down move, but then I need to see an up move that retest that area for a lower high or a double top. And I don't really want them to break that, but sometimes they could break it. So all you need to do is just kind of reverse engineer your stops. And if we're going to reverse engineer 20-point stops, anything that would have been an entry, like let's just say right here, you can't let the market go here. So that's a pretty decent like room that you're giving it. And I know it sounds crazy, but you're losing $80 on 2 contracts to go 20 points to 57, 56 on a downside move. The potential is there to execute that trade. I think this trade is still active. You know, you might get another reaction to the downside, but if the bulls flip this condition here, you have a triple threat. So maybe you just get out of the position if you didn't take anything down there. But we knew to take something out there. There goes your 5-minute demand line. Looks like they kind of wicked from. We're shooting for the 336 level right now on that play. So let's see if they take out the highs or if they come back down. And you're just a victim of time now. But that's your Spark recap. I'm promising to keep these things under 20 minutes definitely. I'm trying to shoot for 10. So I hope you kind of, once again, my goal here is to help you guys gain perspective on exactly how I enter in the 2 setups that I had. Reversal trades at, key levels. Triple threat plays, which occurred right here. So there's always a reason to get into the market. How much you're going to get out of the market, how much the market is going to move, I don't know. I never know that. But I do know that the reaction seems to come from these levels. So let's hone in on that, take advantage on that with either size as we, scale up and grow, or risk very little, make what we can, and, kind of call it a day. I hope you guys are having a great day. I'm going to go ahead and enjoy my wife. So peace.